Good morning, ladies and gentlemen. Thank you for joining our webinar this morning. This is another webinar in a series of economic webinars we've been holding for, I would say, like many years. Well, in recent webinars, we try to capture what's the impact of the COVID-19 on economies, also on businesses, and this will be also the purpose of the webinar today. To show what are the economic developments, and of course what are forecasts, what we estimate, what we anticipate, how it could change. My name is Grzegorz Sielewicz. I'm Coface economist covering Central and Eastern Europe. Well, today I've seen that many of you registered from really many countries, not only from Central and Eastern Europe, but also outside our region. So that's we are really grateful for that. We hope you will find this webinar useful and interesting. So indeed, we have attendees from the core Central and Eastern Europe, but our business split is somehow a little bit different. We consider Central Europe also. We include countries like Austria, Russia, additionally, as I said, core Central and Eastern Europe, so countries like Poland, Hungary, Romania, Czech Republic, Slovakia, Baltics, Balkan economies, Romania, of course. So indeed, we have attendees today from all those countries. So I would like to, in next several minutes, I will point also to many of your countries in terms of economic developments and economic data. Maybe at the beginning, some housekeeping issues. Well, we will start with the presentation. I will start not from the Central and Eastern Europe, but from our global views, as they are definitely very important nowadays. And then we will go to some indicators from our region, from Central and Eastern Europe. And afterwards, after my presentation, you will have the possibility to ask questions. We will hold a Q&A session. Actually, you can already ask questions right now during the presentation. You do not have to wait till the Q&A session. If you have meanwhile any questions, how to do it? Well, on the right-hand side panel of this GoToWebinar tool, you have a questions window. So once you type this questions window, you can then send questions to us. Then, as I said, at the Q&A session, we will do our best to answer your questions. Okay, so well, I think that's basically in terms of those initial housekeeping issues. So right now, let's go to presentation. Let's share with you our recent views, how we assess the economy worldwide, and of course in Central and Eastern Europe. Well, basically, our latest forecast assumed that we will have a recovery, of course, this year. I'm sure you've heard about it. You've seen it's all in the media that the 2021 is the year of the recovery. However, as you probably also noticed, we named our presentation, our meeting, our webinar today towards sustainable growth, because the recovery that we have right now is a quite uneven recovery, and we think that it's more justified, more valid to look more like forward-looking. Is it really in the full recovery, or are there any concerns regarding that? And unfortunately, there are concerns which I point out in a minute. So wait, basically, of course, as you perfectly know, in 2020 we had a huge recession in global economy, much larger than it was during the financial crisis of 2008-2009. Estimations were different during 2020. Not only we at Coface, but also other institutions did many forecasts, many estimates, changed them quite often, because there was a very exceptional year. We didn't have such lockdowns in many countries, global lockdowns, that we had last year, or that we still have in 2021. But finally, not finally, because for 2020 we have still estimate. They are not for all countries. We do not have still final figures, but it seems that the recession of the global economy reached 3.8% in 2020. Then in this year, in 2021, we expect that the global GDP will reach 4.3%. So as you see, it's a quite solid V recovery here. And the level is much stronger than it was before the pandemic, and at the same level as we estimated at this stage, at the same level like it was in 2010, so the year when there was the recovery process after the financial crisis. But as you will see in a minute, that there are some reasons for that, that we expect such a strong recovery. But before I go to that, well, definitely the positive factor, the one that contributes also to the global GDP growth, is the situation, developments of the global trade. We have the revival of global trade, which actually started already around the middle of 2020. So just after the first wave of the pandemic, when there was some relief, manufacturing sector started to recover, and the global trade also here there was a recovery of the global trade, which was strongly impacted and strongly contributed by the Chinese demand. Actually, the Chinese economy, which suffered first time from the first stage from the epidemic, from the pandemic, or at this stage it was the epidemic, and then it recovered already quite fast, because they tackled mostly with the pandemic in January, February, partly March 2020. But then the epidemic, or at that time the pandemic, moved to other regions, to Europe, to the US. And at the time when we had peak of the first wave, or the peak of the second wave of the coronavirus, Chinese companies, the Chinese economy was able to recover faster, because there were, I would say, one step ahead compared to that what was in Europe and the US. So all in all, that contributed to stronger global exports. But as you can see on the chart on the right hand side, that seems to be stabilizing right now. There's not so much room to have additional acceleration here. And well, coming back to our GDP growth forecast, as you've seen a minute ago, we expect that this global GDP growth will be 4.3%. But as I said, there's something behind it, and of course, this global GDP growth is a weighted GDP growth. So the bigger economy, the bigger impact in the whole GDP growth figure. And here, as you can see, two large economies, so China and India, will grow this year very, I would say, really strongly. Maybe for Chinese one, not as strong as it was in previous years, when, especially before 2010, Chinese economy mostly grew in double-digit levels, more than 10%. But nevertheless, this year Chinese economy, according to our latest forecast, will grow by 7.5%. Especially that last year in 2020, and it is kind of exception, they didn't record recession. Of course, they recorded negative growth rates in first and the second quarters of last year, but finally the figure for 2020 was not as bad. It was positive. So, well, coming back to this global GDP growth, which will grow 4.3%, please be aware that is strongly contributed by this large Chinese economy. And when we take a look at other economies, and here on this chart you have largest economies worldwide, you can see that, well, mostly, unfortunately, the level that was lost in 2020 due to the pandemic will be not compensated in 2021. So that applies unfortunately to most economies, also to economies in Western Europe, which for countries in Central and Eastern Europe are very important trading partners. Still, most of a bulk of exports is sent to Western Europe, especially Germany. And as you can see, although the German economy it has not suffered so much from in terms of recession in 2020, like for example the UK economy, Spanish economy, or French economy. However, in 2021 here also it applies the same, so those effects will be not compensated. Here, of course, in terms of those largest economies, you see Russia here, Russia, which is according to our views expected to grow 3.2% this year. Actually, the recent increase of oil prices and also the likelihood of the fiscal stimulus in Russia this year put even the upward pressure on our GDP growth forecast. At this stage, I would even see it a little bit better at 3.5 or 3.6%. And here also one comment, apologies, but the Russian GDP growth figure for 2020 was the recent figure released by the statistical office is minus 3.1%. So sorry for this typo. Here in 2020 it occurred that in Russia the recession was not as strong as previously estimated. I will also give more comments to the Russian economy when I will move to Central and Eastern Europe. And here, of course, in terms of those large economies, you see here the US economy. And here also our latest forecast for the US economy showed that it will grow by 3.2%. However, right now we are in the process of updating our GDP growth forecast, and I would say that there's a strong reasons to revise up GDP growth forecast for the US. Before I will give you more details, I think that also talking about the global economy or just economies, it's impossible right now not to give some comments, remarks on the health situation, on the vaccination process. Indeed, the vaccination process right now became a strong an important, very important component of the economic recovery. Here you can see the number of doses administered by per 100 people in mentioned countries here, in some selected countries here, in the European Union, in other advanced economies, and also in emerging economies. Basically, what you see here, those are data as of the beginning of March. Situation in the European Union is, I would say, roughly similar. No matter if this is Central and Eastern Europe or Western Europe, we have some slight differences, but the pace, I would say, and the level of the vaccination process is roughly the same. We have some outperforming countries which are in a better position here, looking globally, and those are countries like mostly Israel, and then the United Kingdom, the United States, but also we can find some other countries, like for example United Arab Emirates, or relatively Chile in Latin America, that is somehow ahead of other countries. And indeed, I wanted to show you those data because it's not only important from the health reasons, from the health situation, but also from the point of view of the economic recovery. So those countries that are faster with the vaccination process are likely to be faster on track with coming back to those pre-crisis levels. Unfortunately, that does not apply at least so much to so far, and so much to Central and Eastern Europe and Western Europe. So all in all, the European Union seems to be not as good performing as, for example, the US here in terms of the vaccination process. Well, I started to talk about the US economy, and I think it's worth to say a few more words about the US economy, because indeed, on one hand, they are focusing very much on the vaccination process. On the other hand, also when we take a look at economic indicators, it seems that the recovery is going faster in the US than Europe. Of course, there are also, well, there are significant reasons for that. So as you can see on the chart on the left-hand side, various relief packages were introduced in the US. Well, first when Donald Trump was the president of the United States, then Joe Biden's proposal, very significant one compared even to those what was previously. So that brings some economic relief. Of course, I wouldn't like to say that Europe didn't do it, because in Europe we also have various measures that were introduced in particular countries, very strong ones, and since the Second World War, we can say that globally there were not so many measures and such a huge amount that was introduced to stimulate the economies. But here I think that the US economy is faster with those stimulus measures, and also with the vaccination process. And I think this chart shows quite well how it looks in terms of the economic recovery, in terms of the domestic demand, or being more precise, household consumption. As you can see, retail sales in the US, especially in last months, they have been recovering, whereas in the EU they are first they stabilized, I would say, in the second half of 2020 with little bit improvements, but recent months show that those concerns that are on the vaccination process, on the third wave of the pandemic that we have in many countries, also in our region, like for example in the Czech Republic, which according to the number of inhabitants is really high, not only in terms of Europe, but even globally. So that's the reason we have such a picture with much better recovery of retail sales in the US than we have in the EU. Well, I've already said about China, about Chinese demand and its recovering manufacturing sector, which since roughly the middle of 2020 started to bring benefits for the global manufacturing sector and for the global trade. But it's also quite important to say that the momentum is slowing, unfortunately, in China. When we take a look at PMI indicators for the Chinese manufacturing sector, it's still above 50 level. So that's a good sign, because when it's above 50, it is considered to be a recovery of the manufacturing sector. But as you can see, the latest data showed that it has been slowing down. Well, regarding reasons, there are like increased prices of commodities. There are also still very significant concerns and disruptions to global supply chains. All of that is impacting the Chinese manufacturing sector. And moreover, when we take a look at the Chinese economy, well, it's right now it's mostly contributed, if you will, by investments, fixed asset investments, mostly on the real estate development side, partly also infrastructure investments, but they are just slightly positive. In terms of other indicators like household consumption, well, households are quite concerned. So the Chinese economy, as I said, the momentum there is slowing, and looking at details, the structure of the economy, it seems that there are not all engines active here of the Chinese economy. So the reason for the revival of global trade somehow right now is we are just losing that. But as I said, still, as you see in terms of PMI levels, it's still above 50. In terms of global developments, I would also like to point your attention to prices of inputs, prices of commodities, prices of food. As you can see on the left-hand side, the food price index, it has been soaring in recent months. What were the reasons for that? Well, as you can see, it started to increase during the pandemic in 2020. It's the impact of the pandemic, so that in many countries, I would say, in all countries, we had a panic stock of buying stock of food products because people were afraid of lockdowns, that they will be not able to leave their homes. And they also were concerned about their health situation, so they wanted to limit going out for shopping. So in all countries when the lockdowns were introduced just before that, we had a really panic buying of all, maybe not all, but many food products. That increased demand, that was, or in some cases it still is, it impacted the prices, strongly increased prices, as you can see in all those components that are published. So meat, dairy, cereals, so grain, oils, and sugar, we had strong increases. I would say the steepest curves were in terms of oils, grain, and the overall food price index. Of course, here this increased demand is not the only one reason. The supply side issues. So some countries wanted to secure supplies on the domestic market. They also wanted to limit the increase of prices on the domestic market, and here Russia is a very good example of that, with implementing first some restrictions on or quotas on exports, then the export tax on grains. So that also impacted the global food prices. Moreover, like for example in China, China, as a reminder, is still a big producer of food, and especially pork meat, and previously they were affected by the African swine fever, and as they tackled with this situation, of course there are still some issues with the ASF, but the situation is much better than it was. So rebuilding of the livestock of pigs, that also contributed to higher demands for some food products, like for example grain, like oils, and overall this picture of food price index looks like you have it here. How it transformed to countries in Central Europe? Well, I would say differently. You have consumer price inflation on the right-hand side. And indeed, in some countries, inflation increased, mostly in Russia. As you can see, according to latest data, as of February 2021, inflation in Russia reached 5.7%, so compared to previous levels, quite high. And here, indeed, it was strongly contributed by these increased food prices, despite attempts of the government to limit prices, various attempts of government to limit prices domestically. On the other hand, the Russian inflation also was impacted by the depreciated currency, with still lots of goods, components imported, so that impacted also the overall inflation. Then we have also relatively high inflation compared to previous levels in Poland, but here there were some law changes like introducing additional taxes, also higher prices of energy that impacted here the prices overall. In other countries, well, inflation, it depends, because, like, for example, in Bulgaria we have lower inflation. In Austria we still have inflation that is on a relatively stabilized level. What are reasons for that? Why it was not transferred from the food price index? Well, depending on the country and depending how the inflation basket is calculated, we have rather in those countries a significant part of the inflation basket it's a part of processed goods. So it's not that directly, for example, increase of grain prices affects the consumer inflation. If that translates to that what people usually buy, and here, as you can see in the food price index, you do not have, for example, vegetable, fruits, and so that it has not transferred so much to the consumer price inflation in those countries. But nevertheless, if this situation lasts longer, and it seems it will not go down very fast, I would expect that consumer price inflation and also food price indexes will stabilize rather closer to the second half of this year. And then we can also see some inflation still going up in next month, but since then it should stabilize. So at the same time, it should not be such a huge concern for central banks in our region to increase interest rates. But nevertheless, for example, for the Russian central bank, it could be the reason to increase interest rates, or, for example, for the Czech central bank, which is, I would say, very sensitive to any changes of inflation, and it is like committed to act quite fast. Okay, and coming back to this global situation and slowly finishing it, that are not only food prices that have increased in recent months, but also other prices of commodities. Here on the left-hand side chart, you have various chemicals, raw input prices that increased since roughly the middle of 2020. Of course, here the reason was that improving manufacturing sector that were with higher demand from the manufacturing sector. You have also other, maybe just staying with the manufacturing sector. Here you can see that xylol oil prices were quite low, but recent weeks showed that it increased even much more than other commodities. As a reminder, it's used to clean surfaces in the manufacturing industry. So indeed, higher demand for that was a significant contributor. Moreover, we have some speculation of prices here that also, of course, impacted overall prices. But looking for that at the perspective of companies which are using commodities, which are using some components, for them, indeed, there are increased costs of inputs, and not only commodities, but also cost of transports. As you can see on the chart on the right-hand side, the cost of transport since the first wave of the pandemic till right now, in terms of container freight costs, they increased roughly 3 times. So that's huge. Indeed, this demand recovered. Moreover, some containers left in Europe at the time when there was not so demand. So it seems that also there's a shortage of containers and overall that impacts prices with recent also increase of crude oil. And indeed, in terms of oil prices, that's another component of increased prices of inputs. As you can see, since October 2020 till today, because we still have Brent oil price roughly the same level that I updated this chart. So we had a strong increase of oil prices. Actually, they rose by 23% even since the beginning of the year. So even if we focus just on 2021, and that made us to also to increase our average Brent price forecast. Previously, our forecast was $50 per barrel, per Brent barrel, but right now, recently we've updated that to $60. And just a few more words on the oil sector, because I think it's overall important not only for our Russian attendees, as Russia is a very active explorer of the oil, but also in terms of cost of inputs for other countries in our region. Well, so basically on the supply side, we expect that output is going to pick up this year. Driven by the rising output from the OPEC Plus countries. So they recently agreed to return a total of 2 million barrels per day to the market. And they even left some additional capacities, so just not to be oversupplied here and to negatively, I would say, to make prices going down. So indeed there's even some more room here. Moreover, we should be aware about the presence, of course, of the US shale gas producers, shale oil producers. As you probably know, that was the reason in 2016, 2015, 2016, when the US shale oil producers wanted to gain more market shares that impacted overall prices, because we had like oversupplied supply here on the market. It impacted overall prices. But right now we think that for them the profitability is much more important than the market share. So we would rather exclude such a huge inflow coming of oil coming from the US shale producers. Still, those extraction costs are different compared to other sources. And then moving to the demand side, well, we expect that oil consumption is going to recover along with the global economic activity this year. So indeed, those acceleration of the economy that we hope will be here will be the factor that will be also contributing to higher consumption of oil. And I think as a bottom line, I would like to say that we expect that demand will recover faster than output this year. And that's the reason we expect also so we updated, we revised upwards our forecast for the oil price. Nevertheless, still it is expected that oil consumption this year will be lower than in 2019, so before the pandemic. Okay, so that's on the oil market. And finally, let's move closer to Central and Eastern Europe, to Central Europe, because as you see here, as I said previously, we include here many countries. Talking about our region, countries that you're coming from, basically, of course, similar to that what was on a global scale, we had a huge impact coming from the first wave of the pandemic, with those strict lockdowns that we had in many countries. So as you can see, when we take a look at quarterly growth, there are year-over-year changes, but in particular quarters of 2020, you've seen that still the Q2 of 2020 was the period of the deepest economic contraction. And then There was some, I would say maybe the recovery is not the right word, but the negative impact was not as deep in the third quarter, when indeed it was the revival of global trade, as many countries in our region are active exporters. They use not only cost competitiveness but also quality competitiveness, and that they were able to benefit from this revival of global trade. And in the fourth quarter, so the time when we had rather the second wave of pandemic, because right now we can say about the third wave of the pandemic. So in some countries, indeed, the results were poorer, were weaker than the third quarter of the year. On the bottom part of this chart, you can see GDP growth for 2020, entire 2020. So it seems that countries that are very open, that are dependent on external demand, and including also the automotive sector, which suffered a lot from them and still suffers a lot from the COVID-19 pandemic, those countries recorded much higher recessions. So here, I mean Austria, Czech Republic, Slovakia, Slovenia also, partly Hungary. When I showed you the chart with global GDP growth forecast and forecast for the main economies, you probably have seen that in many cases this economic contraction was deeper actually that we have in Central Europe. Here, of course, we have Lithuania, that recession was not a very deep one. Then we have Poland and Romania. In terms of Lithuania and also other Baltics, the situation right now is very different from that it was during the financial crisis, when Baltic economies suffered a lot from the economic contraction. But here right now, those lockdowns were slightly softer than in other countries, and moreover, those countries are right now strongly focused on the ICT sector, which was one of the sectors that even gained during the pandemic. Moreover, countries like Poland, Russia, they are strongly dependent on domestic demand, on household consumption. Especially in Russia, we have this economy is much more driven, is mostly driven by the household consumption, by the domestic demand. Moreover, there's not so huge share of the services sector, including restaurants, accommodation. Like for example, in Austria is still strongly driven by the tourism sector, which, as you know, suffered a lot. Suffered not only during the summer, but even at the end of 2020 and the beginning of 2021. Actually, the winter season for Austria was quite lost here. So also once data will be released for the Q1 2021, we will see the impact of that for the Austrian economy. Well, it takes nearly 15% of GDP. In terms of value added, it's of course lower. It's somewhere around 7%, but still this impact was and is huge in terms of the tourism sector. And looking at particular components in economies of Central and Eastern Europe, retail sales, they of course suffered a lot during the first wave of the pandemic, with really strict lockdowns in countries in our region. As you can see, the decrease was like 20% or double-digit levels in many countries. Since then, it started to recover. So there were some contraction in November when we had the second wave of the pandemic. We still have, of course, lockdowns, stricter lockdowns like in the Czech Republic. We have partially in Poland, in some regions in Poland. So as you can see, those retail sales mostly are not very accelerating, but in some countries they are remaining on a positive level. whereas in other ones, as I said, they are stabilized. Exemption here is Austria, when you see the contraction in January was a huge one. As a reminder, since 8th of February, the lockdown was eased in Austria. Indeed, in January, there were some strict restrictions introduced, so that all in all impacted also the retail sector and the retail sales. And of course, question is that how it's going to change. Is it going to accelerate or not? Well, according to consumer confidence indicators, households are still concerned about this situation. So you can see on the chart on the right hand side that there are some countries, of course, most of countries where we have the consumer confidence indicators on higher levels than in April 2020, but you cannot see that households are really positive on that. First is on the vaccination process, on the health situation, but the second issue is, of course, on the labor market. So as you perfectly know, we have had many stimulus measures introduced, and those included also the softening impact of the pandemic on the labor market. Households are concerned that those stimulus measures could be phased out, and actually that's right, that they will not be continued endless. Of course, the recent recommendations coming, for example, from the IMF are that they should be, even if they are reversed, then afterwards, if it is needed, still stimulus measures should be also valid this year. But here, indeed, households are concerned, and even if savings rates are higher because of the pandemic, because people didn't travel so much, they didn't spend so much money that they would use it if there won't be pandemic. I think that it's fair to say that they are still concerned. So it's not a clear recovery of the household consumption. I would say the full recovery of the household consumption. This situation is quite stabilized, and it will depend again on those stimulus measures, how long they will be, and is it going, actually, if they are phased out, is it going to affect the labor market? On the industrial side, so manufacturing, which for our region remains a very important part of economies. Well, here I would say that those charts with industrial production and retail sales, they show similar trend with a significant contraction in April 2020, then some rebound. And here I would say that even more countries are on the positive side of industrial production, and that is impacted, of course, by what I said previously, so the revival of global trade, by improved perspectives for the manufacturing sector. That is confirmed also in terms of PMI indexes. So those indexes that you can see on the chart on the right-hand side, I put here not only available countries for our region, but also Germany, which remains an important crucial trading destination for a bulk of countries in our region. So as you see, all those countries remain above 50 level, and for some of them, those levels are much stronger than even they were before the pandemic. But here, please don't be over focused, I would say, on PMI levels, because they are good indicators of that what will happen with industrial production. But those questions that are asked to companies are usually to compare the previous month, and indeed there are some improvements. There are improvements that fuel those figures. But here, in all details of coming from PMI surveys, we have those concerns on labor. Labor shortages, they remain partly, but mostly on disruptions on global supply chains, or even regional supply chains with access to commodities. with difficulties, with just shortages on some commodities, and that paradoxically it impacts the overall index, because when it was constructed, it seems that they assumed that if there's a huge demand for commodities, for components, it would mean that it's a strong recovery. But right now there's a different reason I mentioned before for the shortage of commodities, shortage for some inputs, like for example semiconductors. Conductors are a very good example here, and that I would say artificially puts these PMI levels higher than it's the picture, the real picture looks like. Well, I already said about the vaccination process right now. Just two charts, more detailed charts in terms of the progress in countries in our region. Well, so as you can see, whatever we take a look, so vaccine doses administered that you have on the left-hand side, or the share of population that was fully vaccinated already. So on the right-hand side, most of countries are roughly in the same area. Maybe here, as you can see, Bulgaria is unfortunately a laggard here, but they were slower at the beginning. Right now, at least in terms of doses administered, the trend in recent weeks is somehow similar to other countries. And as I said previously, it looks somehow similar to that what we have in Western Europe, but at the same time, it's unfortunately weaker than it is in the US or other countries that I mentioned at the beginning of our meeting. And here, of course, it remains very crucial, the vaccination process and its impact on the recovery. We expect that in advanced economies, in those mature economies, we still expect that the herd immunity could be in the second half of this year. We still hope that those delays in terms of vaccination deliveries will be solved. Also, we have another companies with another vaccines going into the market, like for example Johnson & Johnson vaccine. So we still hope that, as I said, advanced economies will be closer to the herd immunity, and the World Health Organization defines the herd immunity when roughly 60 or 70% of the population is vaccinated. However, it brings, of course, this scenario at risk right now when we look at current figures. So it could be somehow optimistic, but as of now, we keep our scenario. Coming to the end of our meeting, I wanted also to share with you results of our recent poll and payment survey. So we do payment survey for a number of countries worldwide. We have Germany, we have in some Latin America countries, in Asia, in China, and other Asian economies. And here I just wanted to provide you that as an example of that how the situation with the pandemic, this economic deterioration, impacted the liquidity situation of companies. And well, we have a paradox here that in most countries the payment liquidity situation improved. Moreover, insolvencies, business insolvencies went down. Of course, it's quite paradox at the first glance, because when we take a look at this huge support, fiscal or quasi-fiscal support, quasi-governmental support that was introduced also with some monetary policy tools introduced here, then indeed it impacted the payment liquidity situation in a positive way. And actually that's also the conclusion coming from our recent Poland payment survey, where you can see the average payment delays in Poland. They dropped from average 57 days to 48 days, with all sectors recording lower payment delays. However, when we ask companies about how they assess the payment delays in the future. So they expect in 2021 they will increase. And indeed, those phasing out stimulus measures that are likely to be done at the some stage that will affect companies. And most of companies reported that they expect lengthening payment delays, especially from such sectors as agro-food, textile and clothing, and transports. And moreover, in terms of question on the assessment of business activity in 2021, as you can see on the chart on the right hand side, we have more pessimistic answers in terms of deterioration that it was in 2020. So indeed, there are lots of concerns despite this economic recovery that is going on, because, as I said, the economic recovery is mostly expressed by positive GDP growth rates. But as you've seen, that there are many question marks on those components, how it will go. Like in Central and Eastern Europe, of course, one is on household consumption, but it seems that the part of fixed asset investments of the domestic demand will be somehow lagging here, because companies are quite reluctant to invest more when they are not so sure about this progress of the economic recovery. Moreover, capacities, spare capacities are here, so capacities decreased during the pandemic. So first, the companies are likely to increase their capacities, then to conduct additional fixed asset investments. So that's why, despite this economic recovery, it applies not only to Poland but also to other countries. When we hear that 2021 is going to be a challenging year. And here, of course, as I said, insolvencies have been going down in 2020, but this situation is likely to be reversed in 2021, especially, as I said, when those stimulus measures will expire. So not only 2021, but 2022, we will likely to see increased business insolvencies. And for the last part, our recent update of sector risk assessments. As perhaps you know, perhaps you follow our publications or other previous webinars, we do updates, regular updates each quarter. We revise sector risk assessments, or just we make some affirmations depending on the situation. And recent updates of sector risk assessments, mostly those included some improved perspectives for the automotive sector. So indeed, after this deep contraction that was in 2020, we expect that there are slightly better prospects for 2021. It was already confirmed by a higher demand from Asia, especially from China, also for car brands, European car brands. German exports also accelerated thanks to that demand. But nevertheless, for the automotive sector, we still have many concerns here. And is another stage of new emission standards, change consumer preferences, the demand that is going to come back to the pre-crisis level not so fast. There are needed some, like, at least 3 years to be back at this level. So that's why, although we upgraded them in the automotive sector in a number of regions, you can see that it's still on a high risk. So still it's not brilliant. We also revised up the construction sector in North America and agri-food sector in Asia and Pacific. I wouldn't like to be too detailed here. We have publications on that when you can take a look at it. And we have also, beside of the sector risk assessments, we have also country risk assessments. When we did lots of downgrades once the pandemic arrived to those particular countries, as companies had to tackle with the economic deterioration. And right now, we started to upgrade some countries, but actually there are not very strong reasons to upgrade many countries. We recently upgraded Mongolia and Azerbaijan. Maybe perhaps that's only could be an important information for the Russian attendees, that maybe perhaps you do some businesses with those countries. Taiwan also as the country that quite fast rebounded its economy from the COVID-19. But in terms of other countries, so far that there are no upgrades. I think that, as I said previously, so for the economic recovery, it's quite crucial what's the stage with the vaccination process. So and unfortunately in Europe we do not have good messages here still. At this stage, at least, this vaccination process is going quite slow. Well, so I think that's basically all in terms of this economic picture that you've seen. Right now, let's go to the Q&A session. I hope you will have some questions. Of course, if something was not clear, please let me know also in this questions window. So as a reminder, on the right-hand side of this GoToWebinar panel, you have the questions window when you can type your questions or your comments. Then I will do my best to answer them. Meanwhile, let me also tell you that today's presentation has been recorded. So if you would like to listen to that once again, if you'd like to share it with your colleagues, you will have such a possibility. You will be provided with a link to download that in few days. Then, moreover, if you would like to have the presentation I just showed you on your desk in your files, also on the right-hand side of this panel, of this GoToWebinar panel, you have the handouts section, and you can download right now the presentation for your desk. Moreover, I also uploaded there our recent barometer publication. This is the publication that we publish each quarter when we update our country and sector risk assessments, but we also put there our outlook, our view on the global economy, what's happening. So I hope that could be also useful for you. The latest one comes as of February, so it's still quite fresh one. Moreover, I encourage you also to take a look at our publications. So, for example, I showed you a few minutes ago the conclusions coming from our Poland payment survey. And no matter if you are our client or not, it's available for free. It's available for at our website. You can download that if you are interested. Just last week, we also published the publication on oil exporters in Middle East and Africa. I think right now it's a very hot topic with accelerated prices of oil. So if you are interested in this subject also, you can take a look at our website. And even I have, in terms of our forthcoming publications, as we release lots of publications on different subjects, I have for you a better way. So if you follow our LinkedIn account, our company account, we publish there, we provide links to all our publications, so you wouldn't have to follow our website. Once you follow our LinkedIn account, then you will be we update this our account with publications on a regular basis. So I think that's the best actually solution. Okay, so right now let's move to questions. Let me take a look if you already have some questions. Okay, there are some questions. Let me just only read them. Okay, why is there no purchasing manager index from Poland? Well, it seems that's my mistake. If there was no one, let me come back. No, it's here. It's here. The Poland is green line, dark green line. Okay, it's on the agenda, but it's not in the chart, I'm afraid. Yeah, you're right. So sorry for that. I don't know how it happened that it disappeared from this chart. Yeah, that's my mistake. Sorry for that. Well, basically, the trend is quite similar for Poland that for other countries. It's not as high as in the Czech Republic, but the trend is similar. But indeed, that's my mistake. It remained in the agenda, but I cannot see it in the chart. So sorry for that. Okay, another question. Slide 17. Why transportation is considered as very risky in CE countries? Let's move to 17 slide 17. Yes, it is. Well, indeed, in Central and Eastern Europe, first of all, it is impacted by the situation or overall situation of the transport sector. So we are still very pessimistic on the aviation sector. So airlines that will not recover fast. We still have not only lockdowns but bans on traveling to many destinations, and even if there will be some improvements, we are not so sure if people, only vaccinated people could travel to some particular countries, or just like it is like we have in some cases right now when only tests are needed. So we expect that the aviation sector, the airlines, that are still really months and even years ahead, difficult years ahead. But on the other hand, in Central and Eastern Europe, airlines are not such a significant part of the overall transport sector. In our region, I would say that road carriers, road transports are the number one. Here on one hand side, we see positive side in terms of the recovery in demand, not only in domestic markets but also in external markets. But well, in case of external markets, let's remember that this is this so-called the mobility pact, when Western European economies, despite this is one European Union, they introduced some protectionist measures because transport companies from Central and Eastern Europe were very active on those markets with cabotage services, as they are very cost competitive, and they acquired much of transports of the European Union transports. So this mobility pact with applying of minimum wages in particular countries, Western European countries, which of course in Western Europe wages are much higher than in Central and Eastern Europe, that negatively impacts the transport sector. Moreover, we have this increase, maybe it's not a huge increase of oil prices, it's not the same level that we had, for example, in 2011, 12, 13, 14, when oil prices were above 100% per Brent barrel, but nevertheless we see that fuel prices are right now higher than they used to be in previous years. So, well, some quite mixed reasons, but nevertheless at this stage it does not enable us to upgrade the transport sector. But it's likely that while this recovery is stronger, indeed the transport sector is the one that is going to benefit quite fast from that. So that could be reasons for increases, for upward revisions of the transport sector in the CE. Okay, another questions. Okay, I have heard the comment on also on this question on the transport sector in Central and Eastern Europe. However, results of road transport and forwarding in sea are perfect in 2020. Well, yes, I agree, and we also, not only in the transport sector, we can find some good turnover results, but nevertheless, we here we still have to be some forward-looking. So for us, it's still there are some risks remaining here. So that, as I said, it does not enable us to at least at this stage to make upward revisions. Okay. Another questions. Wood price worldwide is reaching record level. Do you think it is temporary? Well, I think that wood price is right now it's impacted by two reasons, or rather three reasons. Maybe starting from the one that is impacted by commodities. So we see increasing prices of commodities. Actually, I would say all commodities, perhaps except of gold. And sometimes we even could not see a strong reasons for that, but overall commodities prices are increasing, so it's following the trend. So I think partly also wood is also included in that. And then we have a quite good situation in terms of the construction sector. Actually, I would say the construction sector is one of the surprises of the impact of the pandemic. So it seemed that the new housing market will suffer from the pandemic, but as the situation on the labor market has not deteriorated so strongly, of course, we had some unemployment rates higher in 2020 than it was previously, but nevertheless, we cannot say that this is a significant, crucial contraction of the labor market. So after some question marks on demand on the new housing market in April, May last year, then in our region, we can say that demand for the new housing market is still here, and that, of course, the construction sector uses, of course, wood in investments. And then I would say the third reason is that for the furniture segment, which as lots of households stay at home, they didn't travel abroad. The tourism sector, as I pointed out previously, it suffered a lot. Lots of us started to work from home. That needed some refurbishment, some reconstruction of our apartments, of our houses, and that also led to higher demand for furniture. So I think those are those three reasons. And of course, you made a good question. Do you think it is temporary? Well, I think it will stabilize. So we still are likely to work from home. Still, the demand for the new housing market is going to be quite solid. Perhaps this increase of commodities prices is going to stabilize. So I do not expect it's going to accelerate, but nevertheless, it's not likely to drop significantly. As I said, as with other commodities, it's going rather to stabilize here. Okay, another questions. Transport is risky sector, but the prices are going up. What is your reason for your risky opinion? Well, I think I answered this question already. And also this the second question coming here. Also, retail food consumption is stable and process are going up. Why you see it risky? Can we get the presentation? Yeah, in terms of the presentation, as I said, it's in the hands-out section, so you can download that. In terms of retail food, indeed, on the side of demand, it was in terms of the retail sector, this food segment, it is going quite well. But if we take a look at the whole sector, I'm afraid that the situation here is not the same. As we have some smaller retailers that were impacted by the COVID-19 pandemic. Those global chains were roughly in a better position. So
In terms of the retail sector that you see on the slide here, we conclude not only food retailers but the whole sector. And here, for example, textile clothing is correlated here, not only in terms of production but stores. There are lots of stores that are in shopping malls, not only from textile clothing but also from other companies that are active in the retail sector that suffered a lot from lockdowns, that they still suffer in many countries. Households, although as I said, the situation on the labor market remained relatively good, it has not deteriorated so much. Households are not very willing to spend much money, because I think, and that consumer confidence indicators showed, they are concerned about the situation. They are not so sure indeed if the situation on the labor market will be still at this stage, at this stage, and is it going to deteriorate or not once those stimulus measures will be phased out. Okay, another questions. Could you please share your opinion if now it's time to make big changes in credit policy in case of postpone payments or no? Well, in terms of the credit policy, here, well, we had to do some, of course, as you as our clients know, and also not only we, but other credit insurers had to adopt the policy to circumstances, to the environment. Well, right now, I would answer your question that it is more like case-by-case issue, because we do not have all sectors or companies. Although I showed you our sector risk assessments, I think right now it's even more valid than before. What subsector the company is active, what are the clients, and so on. So it's more like question for our underwriters how they see it. Is it really performing better, or is it still in a quite weak condition? I would give you an example here. So as I said, the automotive sector is not going very well, despite we upgraded that. It's still on a high risk level, but we have some companies in our region that, for example, are active in producing components to electric cars, which right now we see higher demand for such cars. Also in case of the European authorities, European Commission, there are encourages on in particular economies for increased sales of electric vehicles. So such companies, despite they are in the automotive sector right now, could benefit more than others in this sector. Okay, another question. As it is generally expected that the financial results for many companies for 2020 will be worse in comparison to 2019, what are your expectations for trade credit industry? Can one expect decrease in limits due to poorer rating of companies? Well, I think I just answered this question when I was referring to the previous question. And as I said, once again, I think that our underwriters, I guess this question comes from our client. So please contact our underwriters, because it's more like case-by-case issue. Okay, let me take a look at other questions. What is your current forecast for Russian ruble, so to US dollar and to euro? Well, actually, we do not provide like precise forecasts for currencies, but well, we expect that basically that Russian ruble should should be somehow in the appreciating trend right now. First, because of oil prices, increasing oil prices, but here I would say that it won't be such a huge impact like it was in previous year. For those of you from Russia or focusing on Russia, I think you perfectly know that in Russia we have this rule that when oil prices are above some certain level, there are proceeds coming from that are put aside to the wealth fund, what is a very reasonable approach, and it puts the financial stability of the country on a higher level. And indeed, it would not make that these proceeds from oil external proceeds, so foreign funds for foreign currencies would be there on the market. It would be put aside. So I would not expect that it would strongly impact the currency market in Russia. Although this impact coming from the financial stability and overall from higher oil prices is likely to put ruble on the appreciation trend. Moreover, in Russia, we expect that, as a reminder, in Russia we'll have parliamentary elections this year, scheduled for September. And it's likely we expect some fiscal stimulus measures for households which could benefit from that. That will be also beneficial for the economic recovery, and overall the improved economic situation will translate also to better perspective for the currency. Okay, let me take a look if there are some other questions. Okay, there's no information regarding Slovenia in graphs. Why? Yes, sorry for that. We have really many attendees from many countries today. I didn't want to make those charts hard to read. So as far as I remember, Slovenia is on the chart with GDP growth forecast, but indeed, in terms of other charts, probably it's missing. Although, of course, like for PMI levels, it's not only Slovenia, but only we have few countries in our region that are available here. Well, so sorry for that. That is what not mentioned, but it was just impossible to include all those countries here. Well, basically, maybe a few words in terms of Slovenia here. We expect that the Slovenian growth this year will reach 4.7%. That's our latest forecast. And in case of Slovenia, of course, it's very dependent on external demand. It's a bulk of GDP is exports take a bulk of GDP. Here, I would like to say that Slovenia also has a good factor, good component of when we take a look at industrial side of its economy, that there's a significant share of the pharmaceutical sector. So indeed, Slovenia recorded a recession last year, which was, I would say, even deeper than in a number of countries in Central and Eastern Europe. But here, this impact was somehow mitigated by the pharmaceutical sector. And here, although, yeah, we still believe that the pharmaceutical sector in our region and in Europe is still in a good shape. And in Slovenia, it is likely the overall economy is likely to benefit, and this growth level of 4.7% will be contributed also by the pharmaceutical sector. Okay, other questions? We have also a question about other currencies like Polish zloty, Czech and Hungarian currencies. As I said, we do not make any like detailed forecasts. We were not bank that do such forecasts. Here maybe looking not only at those economies that's mentioned here in this question, but overall in Central and Eastern Europe. Well, I think that when investors or other market participants will be looking at, for example, the stock market, the currency market of Central and Eastern Europe, they could be quite optimistic on that. As I said, the weak point right now is fixed asset investment of companies, that it is likely to be weaker this year. But on the other hand, we as Central and Eastern Europe is still strongly dependent on EU funds. Basically, this year will be rather the weaker year, because we will have the new perspective of EU funds with some delays in fulfilling all those regulations and so on. But please remember that we have this so-called the EU Recovery Fund, or the Next Generation, that was constructed to help economies with the COVID-19 pandemic to indeed to have some investments contributing to the overall economic recovery. And thanks to that, it won't be a gap between those two perspectives, and I would expect the positive impact for like infrastructure investments from this EU Recovery Fund coming, unfortunately, not in 2021, because that's too early, concluding domestic distribution, but starting 2022. So overall, even in terms of this weak point of investments, some market participants, so that also impacting the currency level, then could be quite optimistic on Central and Eastern Europe, because countries in our region are likely to benefit also from not only traditional EU traditional funds, but also from this EU Recovery Fund. So here it could lead to some appreciation of currencies, but please keep in mind that we have some specific situation in particular countries. So, for example, in Poland, we have unsolved issue with foreign mortgage loans, so that are mostly were incurred in Swiss francs. And this, for example, was already solved in Hungary, in Croatia, but it has not been solved in Poland. Banks are quite concerned, because they are in courts, that there are many applications done by people which are also lost by banks. So this situation is likely to be solved. Also, the central bank hurried banks to solve this situation, and that could impact also the currency market. In the Czech Republic, as I said, we have the central bank, which is very sensitive on changes of inflation there, and it could act much faster than other central banks in the region. So indeed, depending on the next situation and on this uncertainty and on these particular issues, we can see that this appreciating trend I mentioned particularly could be somehow changed by those particular reasons. Okay, so I think we do not have any other questions. So, well, thank you once again for joining our webinar. I hope you found it interesting, and I hope you will join our next webinars in the future. As a reminder, if you would like to have the copy of the presentation I showed you today, you have it in the handout section. I also, once again, encourage you to follow our LinkedIn account, where we publish, when we provide links to our latest publications, which a bulk of them is available for free. And well, I hope to see you, to speak to you at our next webinars. I encourage you to attend not only economic webinars, but also other ones that we do.
So stay healthy and have a good rest of the day. Thank you. Bye-bye.